Hey, g'day guys, Sam here from TradetoProspa to look at Bitcoin on a small scale. For the big picture, you will need to look at my previous posts on the macro perspective, and that's been extensively covered. So let's study this chart, symbolized by this icon. I might use it on a regular basis. Give me any feedback. Trying to make it animated a bit more. So let's look at it. So here is a 2-hour chart. We can move to the 4-hour chart. Makes no difference really at this point. And what we can see is we have our support and we have our resistance pretty much defined by this here. And this bottom candle is probably representing our swing low. Anyway, so when we look at this chart, we'll get rid of this scenario for the time being. Just look at the chart in itself. What we have from a number of perspectives, we have our obviously clear resistance on the top side. If we apply a Fibonacci, the 618 again looks like that's where the shorts came in. Is that enough? Well, we don't know yet, but that was a trading opportunity. So once we broke down this 618 level, it got retested to the previous support, previous resistance, and that was where the shorts came in, and now we're going sideways. So that makes sense, and that comes from pretty much this type of swing trade. All right, so people are playing this out. This swing trade is also, you can say, is a rising wedge type of thing. Yep. So it fits into the model, and what we can also, and from that perspective, we can say, yeah, maybe it's a rising wedge. We don't know yet. It does fulfill a rising wedge structure, but we're not going to talk about it right now. We're just going to cover the key things. Here we have from our reference point to that fib extension, you can see clearly the fib extension 1 was our resistance, so we had a double top. So that explains that. Although it took a while to get there, it is a double top and we're coming down. If it's a double top, then we have a measured move as well. And if we were to do that, our measured move, potentially, we just play that out, and that can come down to this fib level here. So that's another scenario. I'm just going to continue to explain the chart as I see it. The other aspect we can do is, all right, from the bottom to that swing high, you can see the 618 again played it, and so you can see once we lost that position, Fibonacci has confluence with the 618, and so both of these combinations made a good swing trade. The 0.5 Fibonacci, as we can see, is holding it up. So I'm trying to explain the chart. That's what we're seeing at the moment. What is likely to next play out is interesting, and that's the approach that we can take. We can see this go either direction. We can see it go up into this strong resistance profile level and then come back down. So it does a sweep to the top, and when it does that, it's likely to come down. If it's the other way around, so let's just do that. If it was to swing down first, then we have these Fibonacci levels. That level there, that pocket, could do a sweep and then break up to the upside. So I would close my shorts there. If you took that one, that probably is a good level to take some profit, 50%, and you might come down a bit further more. Well, we can explore that as well. And then I do think this will go up. They will likely to see a reversal structure of some sort and a swing trade potentially where the bottom is made here and then you trade to the upside. Now, that is looking from one perspective, and if we were to look at it from what we can say is a rising wedge, it fits into the model. Okay, and let's just clean this up for a bit, and then we'll talk about the rising wedge scenario. Where are we? Here we go. So we have a few clear Fibonacci's. Yep, from 1 to 0, we have this pocket here. So it does have, we actually might get rid of this for a sec. I'll leave that there. And we'll just define our chart. So if this is a swing trade and a rising wedge, as we mentioned it before, then if it does swing up, it still fulfills our need. And what we can do is we can put our Fibonacci there. If it friggin' lets me. I'm not sure how many times I got to click on it. Just reverse that. And our golden ratio potentially is there. Could be the 0.5 as well. So we have this range, and that is now this is this trend line is basically holding it up along with the macro Fibonacci on that level, and we have a shorting position there. Sometimes it can go really high. I don't think that's going to be the case, but I do think there's more likely to find resistance at this level because we've had it before. The last effort, and then we come down. We can see that fib fan level holding it up, and then we could see this last effort, and then this pocket here, 618, and then this rising wedge scenario plays out, and we can just pretty much come to the bottom. This is one level of interest, and the other one is another. Now that fits into the Wyckoff accumulation on one way, so we're going to look at that as well. So I'm jumping ahead of myself, but that we're looking at that scenario. If it was to swing high, good shorting opportunity. Here we need it's a reversal level and take profit, and then this could potentially go up more, but I don't think that's going to be the case. I think it's more likely to come and revisit this level of some sort, and we can talk about why that's going to be likely to happen. And let me just clean this up. So what you're seeing is pretty much a trading strategy, and we don't know what's going to take place, but it does fulfill our requirements. So that was our initial thoughts, and these levels where we think that might take place. And yep. So let's just take this out of the picture. So what we're having now is this Wyckoff picture there. And you can see our selling climax, secondary test, automatic response there. And that's going to be an interesting level there. We'll just leave it there for a sec. We did not get this level here. Okay, so what we did is secondary test, and it's pretty much bearish. So our upthrust did not take place with this Wyckoff scenario. So automatic response, secondary test, and we didn't get a retest up. So this is not really an accumulation structure. That's what I'm thinking at the moment. Accumulation, this is more of a bearish structure because this failed dismally. So that's what I'm thinking. If you look at my other video, it is more of a bear flag on the macro structure, but we'll come back to it towards the end. So what we're looking for, what I was saying before, is this. I did record it, and I stuffed it up, but anyway. So when it comes down, if it comes down to this level, we're looking for the spring. So the spring could be there or double bottom, wherever the case may be, but that is a good box where we can see the spring take place, and then we go back up. Now you can see how, interesting enough, it's the 1.272 level, so we can get a rejection there, or swing high a bit more, and that level there, which is this is the 1.618, doesn't quite show there. I've got to change that template for some reason. So we can do that, and then we get our macro bear flag of some sort. Now will comprise of that. So these are the things I'm looking for: a swing. So just to recap, potentially a sweep to the up before it breaks down, a sweep to the bottom, and it can potentially get play up. And this is also fitting into another Wyckoff structure. Do I have it? No, I don't have it at the moment. I'm not going to bring it out. And there is two dot schematics that really fit that, and the other one is up here. So it does come down and then just continues up. So that could be the bullish thing as well. So there's two scenarios. This is a good position to take profit if we get this going. So if we get that scenario, short it, take your profit, and it could go there. Otherwise, if the majority of the market doesn't take profit, it's probably likely to come back down more. And this is the box that I'm looking for, spring, and that moves up. Usually, that if that takes place, we can have a good idea what's going to take place, where we can take profit. Now, when we look at this from a perspective on the daily, let's have a look at this. Let's just close these off, and let's just look at it from a big picture perspective. So, if we were to get, where is that? Fibonacci, yeah, I stuffed it up. Where are we? Is that the one? No. All right, let's do it again. Damn. All right, here we go. So that is our macro picture. We did discuss this in the past. Yep, give or take. We're not sure exactly where. And we add our Fibonacci. You can see the band. So yeah, you might just do that. That probably fits into it. You can see how this was and is a strong resistance level. And depending on how things go, if it plays a schematic, like I said, so let's just get the Fibonacci out. So you can see the 618 is there. So we can have this type of thing. And then, you know what? And we get our target. So we did that before. Where are we? Here we go. We can say, yep, that is our one. And you can see we can probably sweep this level. And what we have at the end of the day, where are we? If it works out that way, is pretty much a rising wedge. Not a rising wedge. A rising channel, pretty much a bear flag in one way or another. We can also use this, move this up to there, and you can see there could be a rejection there as well. So even though we get a swing, we can find that the middle of this rising channel could be resistance, and we can still, so there is a bearish, that's our one scenario bear flag. The other one could go to any one of these levels, and we can find ourselves coming back down again. I don't see as a reversal. If it was to go really high, this will be a very strong resistance because it was support there for such a long time. In that 3 months, this is going to be definitely a very hard area to pass. So hopefully that makes sense to you guys. I am looking for the downward move. Opportunities are here to short, and if it gets to that level, fantastic. But the short term, we talked about the scenarios of a rising wedge type of thing. So that's my approach to the market. Hopefully that makes you aware, and you might learn some. If you look at this stuff in the past from other charts, you'll learn a few lessons there. You can see this rising wedge that took place. And you saw how it played out. We had our Wyckoff accumulation. Yep. Same as this. And we have this rising wedge. Not much different, really. You can configure this in a different way. You can say that maybe that's the way there. We are seeing a similar thing, but they play out all the time. So let's look up higher. That was a bear flag, obviously. And you can see this is a different formation of a bear flag, but that's a grind line. And you can see how that took place. You can maybe say, yep, there you go. So this one really bounced up a bit more. So when we do that, it broke the 618. It went to the 786, if I was to put that in. It repeats. It's all the time. Let's just make that red. Beautiful. There you go. And we can just make it a bit higher. And maybe we can do that. No, we can't do that. That was a bit awkward, but yeah, the 786 grabbed it. Again, if we look at other areas, sell and climax. This is our grind line. This is very different, obviously, but you can also see every time there's a selling climax, you have this rising wedge type of scenario or channel, and ugly or whatever it is, it still works. It repeats itself a lot. This one doesn't look like a reversal, guys. Doesn't look like a reversal at all. It just looks like a continuation pattern to the downside for the time being. And I'm going to wrap it up on that. Please give me a like and share. Talk to you soon. Cheers.